Welcome back. So in my series, we have been talking about the law behind life insurance. So we talked about the things that I think are the most important. We're working our way down, but I still think that these are items that are worth talking about. So often whenever you are looking at life insurance companies, annuity companies, that sort of thing, you will hear the discussion about company ratings. Okay? So let me unpack that just a little bit. You can take an index of all of the company ratings. It's called Comdex, and it works really, really well for larger companies. So you'll see a Comdex score, 80s, 90s, whatever, and it's just the relative stability of the company. So when you're dealing with larger companies and you're, say, 85 and above, there's really no issue there as far as financial viability and all of that. Okay? I realize that whenever you're dealing with smaller companies, and understand they're out there and they have some very good products, and some of them have some very niche area products, which elder law attorneys, those products affect a lot of what you do. They may not have this grandiose Comdex score because they don't pay for all the different rating services. So in instances like that, typically I have found that you can look at the AM Best scores, because it's been my experience the vast majority of the companies, not all, but the vast majority of the companies at least have AM Best if they don't have everything else that gets them up there on the Comdex score. So look at the AM Best. I've got a few carriers that are B rated, but they serve a very niche market, and I don't have a problem with that. But for the most part, typically you're going to see your carriers in the A rating. The difference is, a lot of times, especially on the larger carriers, when they get higher on that Comdex score, those products may not perform as well. Why? Well, because they've got the higher Comdex score, and they can do that. So let's say that you've got a client who wants, just the absolute top rating that they can find. Well, don't be surprised when that product doesn't perform near as well as somebody a little further down the scale, but just as financially solid. So whenever you hear A ratings and 93, 94, 85 numbers tossed around, that's what we're looking at. For the most part, again, most of those carriers are going to be just fine. Now, you can find some that get a lot lower on the scale, and they're a lot lower for a reason, and it might be worth looking at. So whether it's one of my attorneys that's listening, or whether it's one of the wealth advisors that's listening, and you're looking at this policy across the desk, and you see maybe some low AM Best scores, it might be worth having a conversation. If you see a policy come across the desk and maybe that AM Best rating is a B, but it's a very unique policy, probably just fine. So that's what I look at when I look at quality of carrier. I've had, as an agent, I've had carriers come up on my radar that didn't offer niche products, had low scores, and that also equated to how much I cared as far as having them on my list of companies. Now, a lot of times those carriers pay more because they have the lower scores. I know they have the lower scores, but for me, that's not my interest. My interest is putting my clients with good companies, or my interest is, because I've had plenty of clients come in with policies where I was on the law side of the house, and they were great, and I was able to tell them they're great. I was able to tell them, here's the ratings, here's where the ratings, maybe not necessarily where they were whenever they bought the policy, but where they are today, and give them a lot of assurance on that. So this episode has been on ratings. For larger companies, again, you want to typically look at the Comdex score. For smaller companies, a lot of times you're just looking at the AM Best. Every now and then you may come across a company that just has no scores, and that's what they've chosen to do. They've chosen not to, because they have to pay money for that. They have to pay money for the services to come in every year, and they've just chosen not to do that. As far as I know, I actually don't have any carriers that I do any business with that don't have any score at all. because for me, that's just something I need to know. I need to know what the report card looks like. So, hope you've enjoyed this episode. Again, I'm a licensed Tennessee attorney. I am a licensed life and health insurance agent. This is for informational purposes only. These are only my opinions. I hope you find some value in it, but if you don't, wouldn't be the first time. Feel free to share this, especially insurance agents. Typically, I'm talking about things that insurance companies don't feel comfortable talking about. And it's because they don't have a law license, but I do. So, feel free to share it. Feel free to like, comment, subscribe, all that sort of thing. If there is something you want me to touch on, please let me know. I am winding down the series. Consequently, the stuff that I'm talking about is about to get nerdier and nerdier. For those nerds that are still on here, 7702A is coming up. That's a mech. 7702B is coming up, dealing with long-term care coverage. So I hope that those are ones that you would stick with me on. But if not, I understand and appreciate it. And again, thanks for dropping in.